Hi there, and welcome to Nestegg's latest episode of Meet the Managers, the series where we showcase Australia's top managers. I'm joined today with James Mawhinney, and James is the Managing Director for Mayfair 101, and he is here today to talk about a few new initiatives that he's seen in the market. James, I just want to get a bit of an idea from you, and I think since we last had a chance to catch up, there's obviously been a lot more happening in the market. So can you give me a bit of a law of the land and a bit of an update towards the environment that we're seeing for the investor today? You know, we've had trade war amplifications, we've had interest rate cuts. What is next and what are you seeing?
Yeah, so what we're seeing in the current landscape for a start is the Australian banks have certainly taken a bit of a battering recently, with the RBA cutting rates to an all-time low in recent months. We're finding that a lot of Australian investors are now forced to look for alternatives. This is obviously off the back of the Banking Royal Commission as well, which has caused a lot of uncertainty in that area. What it's meant is that organisations like ourselves and others that have been focusing in the non-bank alternative space are very much thriving at the moment.
So James, IPO Wealth, going back to 2007, you've had great success on that actual product itself, but with all the changes and with market adaptations, what is Mayfair Platinum and how does that take a sort of next step into where investors or what investors are looking for at this stage?
Yeah, sure. So off the back of the success that we've had with our IPO Wealth Fund, we found that our investors were increasingly asking us about other products and other ways that they could invest with the group. So I'm pleased to say that earlier this year we announced the launch of a brand called Mayfair Platinum. In its really simplest form, Mayfair Platinum is like a supermarket of investment products, and over time our group will continue to add new investment products. So our first product that people can invest in through that brand is the IPO Wealth Fund, which we've raised well over $115 million since we set that up a few years ago. A more recent product that we've launched is actually a fixed income product, and similar to IPO Wealth, which was really modelled on the bank term deposit structure. People can invest anywhere ranging from 3 months right through to 60 months and be earning rates of return anywhere between about 3.25% up to about 6.45% per annum.
So James, I think that the hunt for yield is extremely on at the moment, we can say that, to say the least. But I do have to say, what is the main difference or I would say the catalyst between this particular product that you're seeing with maybe something like a low interest environment, people hunting for that yield, and how does that fare for that product itself?
Yeah, so look, with the cut in interest rates, as I said earlier, the investment community is actually being forced to look for alternatives now, where there's a lot of self-funded retirees, even companies that are reliant on an income stream off the cash holdings that they have. But what's happened is because interest rates are now so low, you struggle to get more than about 2%, 2.5% in a term deposit. So what that's meant for a lot of people that are reliant on that income stream, they're now forced to look for alternatives. Obviously there's a range of alternatives in different products. You can put your money into the stock market. If you do that, it's subject to volatility. You put your money into Australian property, as a lot of the viewers I'm sure are aware, that the Australian property market's certainly been quite up and down in the last 12 months or so, particularly in some of the major cities. So what's happened is that investors are now forced to look at income producing products other than the likes of the stock market or blue chip stocks and property because they want consistent returns. That's very much where the Mayfair Platinum suite of products fits in quite nicely.
We see in turbulent times within the market that investors are not just doing it themselves, but I think essentially looking for new initiatives and new assets to look at essentially. Look, for that DIY investor, for your self-directed investor looking for that income, how does this have an intention or how does this work for them?
Yeah, look, when we launched it, there are a couple of key segments that we wanted to cater for. Firstly, individuals. There's a lot of affluent individuals in Australia, and when I say affluent, you don't have to be a multi-millionaire in order to invest with us. The smallest investment size we accept is $100,000. Now, what that means is that we can provide a level of service that a lot of our counterparties are unable to provide because they're generally dealing with hundreds or thousands of much smaller investors. So we specifically chose to focus at that higher end of the market. We also work with a lot of self-funded retirees and retirees that have their own self-managed super funds, and we have around 30 to 40% of our investors in that category. The other category that we have received a lot of investment from in some of the larger ticket sizes has actually been Australian companies. So businesses that maybe have divested some of their assets or even in some instances had no really great strong profit growth, and so they're sitting on large pockets of cash, and rather than putting that into the bank earning a couple of % of interest at best, they've decided to park the funds with us for some instances a short term of 3 months, in other instances up to 5 years, so that they can actually generate an income stream off that otherwise idle money.
So I think asset selection, as you know, is absolutely foremost the most important thing that investors are looking for. So how are you kind of gauging the market at the moment, and also finding those assets or those companies that you particularly want to invest in that you can showcase and produce with your clients' intentions?
Yeah, sure. So whilst you point up front about the environment being quite challenging at the moment, we're actually seeing the opposite on the other side of the page. We're seeing a complete abundance of opportunities at the moment being brought about by virtue of the changing in the property market, the volatility in the stock market. Emerging markets are obviously coming online in the likes of India with the rate of growth that some of these bigger emerging markets are experiencing. So whilst investors that are reading the newspaper seeing a lot of volatility, being as operating in a professional investment capacity and effectively managing other people's money, we're seeing a massive abundance of opportunity at the moment. The way we go about selecting our investments is very strategic. We do take a conservative approach in making sure that we do choose the right assets, and probably the one overriding principle in our investment strategy is this, which is we identify assets that can add value to our ecosystem. And what I mean by that, we own holdings in assets now across 11 countries, across quite a diverse range of sectors, ranging from fintech related businesses, financial services, more technology related companies, wealth management, right through to property. International property, and soon to be a considerable amount of Australian property given the markets where it is currently. So any strategic investment that we make, we always make sure that those investments are actually going to add value to our ecosystem. And what that means is, if I'm an individual investor and I'm wanting to, for example, make an investment in a particular product or a particular business, let's say, or a particular stock, if my returns are limited to that particular outcome, that's fine, and that's the way that most people invest. In our business, because we operate as a group, we have a strong advisory board of some well-recognised business leaders. We have some great businesses that are complementary with one another. When we make that investment, it's not just a case of it being sort of 1 + 1 = 2. It's a case of business 1 plus Mayfair 101 equals 3, 4 or 5. So it means that we're able to generate exceedingly good returns from a lot of the investments that we make, which others just simply can't achieve. And importantly for our investors, it makes sure that we're protecting their capital by making smart investments that obviously add value to us, add value to the group, and importantly add value to our investors.
So I think the fundamental thing is that when markets do change, we're still in that position at the moment, and as you'll know as well, that there is so much idle cash sitting in potentially bank accounts, trusts, term deposits, whatever you want, but there's a lot of cash doing absolutely nothing. How does that fare for you at the moment, and where does Mayfair 101 kind of look at that market as an opportunity?
Yeah, sure. So as I said earlier, we have a minimum investment size of $100,000. For a lot of people, that's a lot of money. For a lot of people, it's not a lot of money. We always say to our investors, like ourselves, dip your toe in the water at an amount that you're comfortable with. With all of our investments, we've never bet the house on one particular investment. I think in every investment we've made, we always start with a smaller amount and gradually build up over time as we see more confidence in that investment. So minimum ticket, as I said, is $100,000. Most of our investors are sort of in the $500,000 range. We have investors into the now over $10 million. We've had an investor recently who topped up their account a 4th time with us. To give you a sense as to how sticky our products are. The other key important thing to note is that we do only work with what's known as wholesale investors in Australia. A wholesale investor is just a type of qualification under the Corporations Act. There's a lot of wholesale investors walking on the street outside. They're individuals that have net assets of $2.5 million or above, income of $250,000 a year for the last 2 years or above. or simply anyone that invests $500,000 or more with us, they automatically qualify. And if the individual's uncertain about those first two criteria, it's very simple. Go and speak to your accountant, tell them that you're interested in investing in us or any other product that's wholesale only, and then they'll make an assessment as to whether or not they qualify.
Now, I think it's safe to say that there is probably a few indicators flashing at the moment that there could potentially be a global economic slowdown or a recession, whatever you want to call it, or maybe not. And I don't want to scaremonger. I'm not looking into our crystal balls and checking out what the market's going to do. However, in a way, when the world goes into that slowdown, or if economies have a recession or anything like that, where would you say Mayfair 101 kind of shines? I know that we are always talking about diversification in the business, and a few things that I know that you're invested in across into other global capacities. So can you give us a bit of a rundown into your thoughts about that?
Yeah, sure. Look, the thing that gives me great comfort and helps me sleep very well at night, albeit it's not often overly long sleeps or period of sleep, is the fact that we are investing in such a diversified asset base. By virtue of the fact that we have investments in 11 countries, and these 11 countries aren't all neighbouring countries in Europe, for example. They are genuinely spread all over the world, everything from the United Kingdom through to Hong Kong, through to Sri Lanka, into the United States, and obviously our homeland here, Australia. So we're very well geographically diversified. We're also very well sector diversified with the types of businesses that we invest in. As I said, we have everything now from property right through to fintech related businesses. There are businesses that have the capacity to generate 100 times plus our original investment. There are others that have the capacity only to generate a smaller margin. So for us, it's about making sure that we've got an asset pool that we're very comfortable with the things that are going on around the world, highlights being Brexit, the trade wars and negotiations between Trump and China, the Australian property market and the overriding low interest rates in first world economies like the United Kingdom and Australia. We feel that our asset base is very well positioned to sustain a lot of the potential economic challenges that we're seeing. We've recently had, for example, the chief economist of ING Bank globally and head of research, Mark Cliff, out of London, join us. Most Australians have heard of ING. A lot of them Australians have ING savers accounts from back in the day when they were paying really good interest. So Mark's kindly joined our advisory board in recent weeks, and when I caught up with him in London a few weeks ago, we had quite a detailed discussion around the fact that it looks like interest rates are going to go very close to zero, if not actually to zero, in both the UK and Australia. So this is a landscape that we can't escape. We live here, and ultimately we're going to have to, as investors and savers, look for places that we can park our idle money so that ultimately we can get a better return. And as I said, Mayfair 101 we consider to be one of those very strong options.
James, it's always a pleasure when you come in. Thank you very much for your time and of course taking us through a few different insights towards the market. I think it's definitely one to watch. And for you out there, thank you very much for tuning in. To find out more information across on Mayfair 101, particularly with Mayfair Platinum and the suite of products, you can click the link below. And also, if you did get a chance to actually not watch it, episode 1 with James Mawhinney is all about emerging markets, which I seriously commend across anyone who's looking at diversification across into more global aspects, people that want to look at things that have maybe happened before in the markets of diversified places, but not happened so much yet. Until next time, see you then.